Drivers in Michigan pay more for auto insurance than in any other state, with premiums the highest right here in Detroit.
A new push in Lansing tonight is aimed at making auto insurance cheaper for getting around Metro Detroit. Lawmakers have tried before, but this time they say it's different.
Hello, and welcome to the special show of Urban Issues discussing the state of auto insurance in Michigan. I'm your host, State Representative Sherry Gay-Dagnogo from Detroit. Michigan has some of the highest auto insurance rates in the country, and these costs are even higher in communities like Detroit, where we pay more based solely on our zip code, our profession, and even our gender. Today, we are joined by insurance expert Doug Heller to get down to the facts and better understand why auto insurance rates are so high. In addition to being an insurance expert, Doug is a nationally recognized consumer advocate and has spent years researching Michigan's auto insurance premiums. Doug, thank you for being here today.
Thanks for having me.
So, how long have you been researching auto insurance?
Well, I've been looking at and working on auto insurance issues for about 20, actually a little bit more than 20 years now. And I've done it around the country, looked at different rates, different systems. And one of the things that I find consistent is that insurance companies take as much as they can out of us until insurance regulators and state lawmakers step in and say, that's enough. We've got to have some accountability here. And that's one of the things that has been a theme through all of my research over the years, is that when you have a product like insurance that you require people to buy, you need to make sure that the companies selling it are held accountable.
So how do we do that in the state of Michigan? This is an issue that has existed long before I was born. Right. I look at some of my former colleagues, or predecessors I should say, who served in the legislature, who were fighting for this very thing, affordable auto insurance, looking at the discriminatory rating factors that are in statute, as well as redlining.
Yes.
So which state would you say is similar to Michigan having the highest insurance rates primarily in urban communities?
Right.
Which state would you say?
Well, let me say it a little differently. Instead of the state that's similar, let me take another urban state, California, which is a state that has extremely high levels of urban density, urban poverty, and not unlike Michigan has. But it has not seen the kind of explosion in auto insurance rates over the last few decades. And one of the reasons is California voters 30 years ago were frustrated because they were seeing the same thing that Michigan sees today. They were seeing rates that were going through the roof. It was hard for people, especially in urban communities, to even find a company that would sell them a policy. And so you have this situation where people were required to buy it or they'd be pulled over by the cops.
Yes.
And yet they either couldn't afford it or they wouldn't even find a company that would sell it to them. And so the voters, because the lawmakers at the time wouldn't do anything about it, the voters went to the polls and passed an initiative. And that initiative changed dramatically the way the insurance companies were overseen in California. So in that state, companies have to justify any rate changes before they can put them into the market. And very importantly, they can't unfairly discriminate based on these personal characteristics of drivers that have nothing to do with how safe they are on the road. And as a result, over the past 30 years, rates in California have not skyrocketed in the same way that they have in Michigan. And I think that there's a really important lesson to be learned, which is if you're going to force people to buy coverage, you need to make sure that the companies selling it are treating people fairly and pricing it reasonably. And so we don't see the kind of discrimination that you talked about right out at the top, where you have extreme differences based on your zip code, where you have extreme differences based on your job title or your gender. In fact, in California, it is no longer legal to rate somebody differently based on gender, because what we saw was women were starting to pay more and more for auto insurance compared to men, and there was no sense to that. And the regulators there said, enough. We're not going to let people base their rates on gender or other things like job title, occupation, credit score, which is really a dramatic and serious problem here in Michigan.
So in our auto insurance, that is certainly already in statute. And so that was one of the bills that I had, which was a part of the affordable auto insurance package. That was both Democrats and Republicans working together on both sides of the aisle to try and bring down our rates, but that women were paying more, that widows were paying more.
That's right.
And so we are treating people differently. And it's just amazing to see that insurance companies are able to do that. And in our state, we have what's called file and use.
That's right.
If you could speak to that
Sure.
so that some of our viewers could understand what that truly means.
Yeah, it's important. And the auto insurance industry and all insurance is regulated at the state level. The federal government doesn't have anything to do with it. And every state takes a different approach. And there are about 6 different types of regulatory systems. One of them, the one that's used in California and several other states, is called prior approval. It means companies have to present to the regulator their rates, and the companies have to justify it, explain it, before they can do anything in the market. They can't go and raise rates willy-nilly. They have to prove up their case. Other states, including Michigan, are file and use or use and files, different variations of the same thing, in which they get to do whatever they want. They sometimes have to give the papers to the department here. They give it to DIFS, the Department of Insurance and Financial Services. But that doesn't mean that anybody's going to stop them from charging what they want. They just go into the market. Well, if you don't have regulators looking at the rates, companies will do whatever they can. And in fact, our state DIFS here has 0 actuaries working to look at auto insurance rates. Well, insurance rates are developed by actuaries. And if you don't have actuaries at the state who are trying to hold these companies accountable, guess what? You're going to get rates that the companies like, but that doesn't mean they're going to be fair.
And then in this model, there's certainly no consumer protection. There's no transparency. And so that, again, was another one of the bills that was a part of that package. I was talking to some of our utility members, I should say a staff member from a utility company, and I found out how the utilities are kind of regulated in Michigan. We have the PSC, which helps to oversee rates and rate structuring, and they are appointed by the governor. We also know that in that model, there's 3 people that can help give some type of redress if consumers feel like they're being price gouged.
That's right.
And so you have DTE, who has one sector of Michigan, and you have the Consumer Powers that has another sector. But again, they have an oversight Public Service Commission that helps to oversee that rate structuring. Which states would you say might have something similar to ensure that, since DIFS is not providing that type of oversight, would a Public Service Commission be helpful for our insurance companies?
Yeah, well, there are actually a number of states around the country that have something called a ratepayer advocate on staff. They have a team of people who are there not to protect the insurance companies, not to protect anybody except for the ratepayers. So Texas has this, I believe North Carolina has a ratepayer advocate. California actually has a slightly different version. California allows allows consumer organizations to go in and challenge the rates of companies. So I've worked with consumer organizations in California, and I've looked at rate filings and found that they were the company was trying to overcharge people. So we went in, we brought a challenge, and we forced those companies to lower their rates. We actually forced them to stop using some of those personal rating factors when we found that they were doing it in violation of the law. The thing is that the government doesn't always have the resources to find everything. And as we know, in Michigan, we don't even have any actuaries looking out for consumers. So to add a layer of protection, like a ratepayer advocate through the state, or allowing consumer organizations to challenge rates and practices, that makes sure that there's a second line of defense for the public. And we need a second line of defense in Michigan because, as we know, we're getting slaughtered out there in the field where the rates are so high, and there's just not the accountability that we need.
So there's been some conversations about actually having a referendum in the state of Michigan. We know that the mayor of Detroit, I should say, has filed a lawsuit talking about the constitutionality of the affordability of rates. And in theory, I agree with the premise of the lawsuit, but it is not for the intention of being able to force a reversal back to tort. Why would moving from our current system of auto insurance, moving to tort, be a challenge from your perspective? And might we explore the referendum process?
Well, first of all, I think that what people in Michigan might not realize is that the benefits that the no-fault system provide ensure that when you're injured in a car accident, you are going to be brought back as best as possible. You are going to be treated well. You're going to get the best care that's available relative to other states. In other states, you're going to have to prove up that somebody else was at fault, and then you're going to possibly have to sue them to get your payments, and it's only going to be the amount of coverage that they chose to buy. So one of the things that you have to ask yourself is, when you give up auto no fault, how much are you giving up? We don't have any promises of savings, and one of the things that we know when we look around all the other states in the country, there are no-fault states and there are tort states that have more expensive premiums, or at least as expensive as Michigan. That's not the issue. The issue is, are we holding the insurance companies accountable? It's in those states where insurance companies are held accountable that rates are affordable. And the question you have to ask is, when we want to solve a problem, is the first thing we do attack the consumers who are innocent in all of this, or do we look at the system's biggest players, the insurance companies, and ask ourselves, are they treating everybody properly? And I think what we'll find in Michigan, my studies show that if you actually hold the insurance companies accountable, there's a lot of money to be saved.
So you're suggesting, or you're stating, that people in Oakland, California, the difference of their rating factors, or the difference in their rating structure, I should say, is no different than Beverly Hills or on Rodeo Drive or Hollywood.
Well, let me give you an example. I did some testing of rates in Detroit and Oakland. Put aside the amount of money that it costs. I just want to show you the difference. I tested a driver who has a perfect driving record and excellent credit score. In Detroit, that premium was about $1,000. Now, if that same good driver, perfect driving record, never had an accident, never got a ticket, they had a poor credit score, that premium jumps to $7,000.
Whoa.
Same exact driving record could live at the same address. Now in Oakland, if somebody with a good driving record and an excellent credit score was charged $1,000, you know how much a good driver with a poor credit score would be charged?
How much?
$1,000. No difference, because the driving safety record is the thing that's driving the rates. And in Oakland, insurance companies aren't allowed to look at your credit score. They cannot apply that because it doesn't have to do with how you drive and whether you're going to cause accidents. In Detroit,
charge me on how I drive.
In Detroit, it can cost you $6,000 more for a policy simply because you have a poor credit score. You know what else would cause you $6,000 more?
What?
If you had been convicted of driving under the influence. So it costs the same in Detroit to be a perfectly good driver with a poor credit score.
Are these some of the same insurance companies across the nation?
Absolutely. I'm comparing the same exact insurance companies. These are big insurance companies that serve all of the different states, and they treat them differently. If they're told by regulators, you can't use credit score, guess what? They know how to make a profit without using credit score.
Do they have term limits in California?
Not for insurance companies. Lawmakers do have term limits in California.
How long are their term limits?
Oh gosh, you're asking me. It was just changed. It used to be, I think it was 6 years in our version of the House, the Assembly, and 8 years in the Senate. It's now a total of 12 years in either house.
Yeah, I think we should combine ours. Let's hold that thought for a moment. It's time for us to take a short break. We'll be right back after this message.
When I was your age, I was just like you, fascinated by stars. But now I get to search for life in the universe. And who knows, maybe life is looking for us too.
So we're like aliens to them?
Yeah. Does anyone want to be a scientist now?
I do.
Awesome. We need more girls in STEM.
Maybe we can find aliens.
I already knew that I was going to go to college, from a young age. I definitely want to major in political science, become the mayor or something, make the situation better for other people. My name is Justin, and I am your dividend.
Visit the Charles H. Wright Museum of African American History for amazing exhibits, spectacular performances, film, poetry, and dance, all at the Wright Museum. An experience you won't forget, and a history you'll always remember.
our neighbors and best friends.
I love my sister.
My heart doesn't see race. Love is love.
Our family is no less than any other family.
Today I'm going to talk to you about physics. Come on in, girls. Let's go. This is the first rocket to get humans to Mars.
Really tall.
I'm a rocket structural engineer, designing and building parts of the rocket. You are the generation that will be stepping foot on Mars. Do I have a group of astronauts on my hands?
Yes.
You can become a rocket scientist or whatever else you want to be.
Welcome back to Urban Issues with State Representative Sherry Gay-Dagnogo. I'm here with insurance expert and consumer advocate Doug Heller. Before the break, we were discussing the impact of term limits and the differences between Michigan and California. And it seems like there's been some changes there as well. But we also talked about the referendum that California used to put insurance on the ballot. And again, there's been some discussions about this in Michigan. So what are your thoughts about that process?
Well, I think that the ballot initiative is a solution when you've come is a solution to turn to when you've come to an end. You know, lawmakers like yourself are making the case for real reform. Unfortunately, when you run into the wall of the insurance industry lobby and its unwillingness to be held accountable, sometimes you do have to turn to the voters, because voters aren't as easily swayed as unfortunately some in the political profession can be by
insurance super lobbyists is what I call them.
By the super lobbyists. And so in California, I mean, we had a situation, this is now going back 30 years, but as I said, rates were out of control. And when there were hearings in the legislature, it's actually quite a comical story. There were all of these consumer advocates, folks like myself and insurance experts, who were presenting the whole case on why the insurance industry should be reformed. And the insurance industry brought one super lobbyist to the hearing and simply said his entire testimony was, "We do not like this bill." That was it. And the bill was defeated. And so voters went to the polls. And the insurance industry back in 1988 spent between $65 and $80 million to defeat the initiative, and voters saw through it. And voters passed the most sweeping set of insurance reforms in the nation. And those have guided California for 30 years and have allowed California to see the slowest rate of auto insurance increase in all of the country. Now, what I think Mayor Duggan has proposed has not achieved the kind of reforms that we would want because it doesn't really hold the insurance companies accountable. It seems to focus more on limiting the rights of drivers and accident victims in Michigan. And what I would like to see is people standing up to the insurance companies and saying, you're the ones who take all the premiums. You're the ones who need to be held to account. And with that kind of reform, maybe that's what the voters should be asked about.
Yeah, I think you're absolutely right. And so I'm serving my second term on auto insurance, on insurance, I should say. And I talk to my constituents, I talk to people throughout the entire city of Detroit and state on removing barriers in urban communities, making sure that we get people to a place where they can be gainfully employed, where they have transportation to their jobs and or to school or to a skilled trade training program or to college. But we have like the systemic issues that perpetuate poverty. And so one of those barriers that I've seen is the penalty that you pay when you haven't had insurance for a while. Could you speak about that and how we look at ways that we can remove that from Michigan's rating structure?
That's right. You've hit on a really important one. It's one that people don't know about. I mean, I think that two of the biggest problems in insurance that people don't realize are a serious problem. We've already talked about one, which is the use of credit scoring, because most people don't realize that their credit affects their auto insurance premiums. The other one is for people who have been uninsured or simply weren't driving their car for a while. Maybe they lost their job and they just had to cut some costs, so they got rid of their insurance, stopped driving. When they want to get back into the market, and we know in Detroit you have very high levels of uninsured motorists in certain communities, when they want to get back in the market, they're going to pay an auto insurance penalty, which can be 30, 40, even 50% premium. So that means that you're going to be paying hundreds upon hundreds of dollars more, even if you're a perfectly good driver and had been for 20 years before you took this break from coverage. Now that barrier is thrown up, you stay out of the market, you stay uninsured, you can't get to that job that's going to give you the best income, you can't get your kids to their after-school activities on time. This kind of barrier to market entry is really outrageous. If we're standing around saying, we want people in the insurance market, we want to encourage more participation, more purchase of coverage, then why in the world would we let insurance companies throw up a barrier to buying a policy? In fact, some companies, if you are on their website and say, they ask you, who's your current insurance carrier, and you say, I'm not insured, they will simply throw up a screen on the website that says, I'm sorry, we're not able to help you right now. Maybe you should try another company.
Yes, that's a
that's
penalty.
Really outrageous. If you're being blocked from the market, well, how are we going to get more insurance customers? And there's a kind of a double whammy in that, because every time a good driver who wants to get into the market can't afford to because they are getting this penalty for having been uninsured, that means that's another good driver who's not in the marketplace. When you don't have enough good drivers in the marketplace, the cost of insurance is spread through a smaller and smaller number of people. That means those who are in it have to pay more. This is the big problem that we have. We exclude so many good drivers from our market. It's like if you had a health insurance situation in which healthy young people were never buying health insurance. Well, then all of the costs would be borne by those who are sick, and that makes it much more expensive. We want to bring people into the market. We want good drivers. And yet we've allowed the insurance companies to throw up barriers based on their job title, based on whether or not they own or rent their home,
Absolutely.
Based on whether or not they have a good credit score or not, and as you just said, based on whether or not they were in the market previously. So with all of these barriers, we're keeping good drivers out of the market. That makes it more expensive for those who are in it. If we brought those drivers in, everybody's rates could come down.
So the larger the pool, the lower the rates. And that's what we should be trying to do, is attract more good drivers to the pool and to remove these systemic barriers that have held them back from actually getting into the pool.
That's exactly right. And one of the things that I didn't just mention, but you mentioned right at the outset that's also important, is your zip code. And this is really important because I can have a couple of actuaries in a room and they're going to debate how much the risk may differ if you're talking about somebody who lives in a rural community from an urban community. And there may be some differences in cost there. But what we see in like Detroit is you can move from one zip code to the next and see premiums jump by as much as 100%. So I did a test around Mack Avenue in
Yes.
Detroit, and I found that if you happen to live on the Grosse Pointe side of Mack Avenue, your premium would be half of somebody living literally across the street.
Not 10 miles away.
Not 10 miles, 200 feet across the
and
street.
in Michigan, we used to have in statute a mechanism that prevented such a large delta within that given distance from one another. So we need to re-explore that.
Yeah, and you absolutely should. And you should and you can. And the fact is, like, there's no actuary I could bring into a room who would say, well, that makes sense. And that's the
No
problem.
sense at all,
but
right
we
across the
don't
street.
remember, going back to what we said earlier, we don't have any actuaries at DIFs who are looking at these rate filings. And so that's how the companies keep getting away with it.
Our time is getting away from us, and so I just want to jump in and kind of address a couple of other things that we talked about. Now, I know when Mayor Duggan first took office, he said that he was going to explore Detroit having its own insurance company. That later morphed into de-insurance just for Detroit, which I consider separate and unequal from anywhere else in the state, to now trying to expand the de-insurance model statewide. And I think just recently, his testimony to the Senate was that he would love to see us go back to tort. Why would that be dangerous to drivers in the state of Michigan? Now, I know a lot of people don't realize this, but 36th District Court has the largest docket in the nation. 36th District Court in the city of Detroit.
Right.
And so if we have these lawsuits, according to the Office of Highway Safety Planning, only 33% of accidents.
I think I've seen the statistics. So a third of accidents in Michigan don't actually have another person involved in the accident.
Right.
So in the tort system, you don't have anybody that you can go after. So that means there's no coverage for you if you, because what you have to do is you get somebody else to pay your in a tort system.
So there's no one to sue.
Right. That's a liability base. So whoever's at fault is the one that's responsible. Well, if you are in an accident by yourself, there's nobody else at fault. So there's nobody to get the insurance coverage from. So what happens, you have that uncovered. It's essentially uninsured unless you've bought excess coverages and comp and collision. And so what happens is you start adding up other premiums that you have to pay that right now you wouldn't have to pay in Michigan. And the other thing that you have to remember is that the auto no-fault system that Michigan has maintained for years has ensured, in a way that most other states have not, ensured that people will get the care they need if they're in an accident. You know, Michigan does a terrible job of protecting people when it comes to the rates that the insurance companies charge, but it has created a system that does a very good job of helping people out of the situation after the accident. You know, because we have, now, you still have to make the insurance companies pay up their claims and not fight over every dollar, but you're allowed to recover after an accident in Michigan. In these liability states, you have to go after somebody who hit you and hope that they had a lot of coverage. And if they didn't have a lot of coverage, you may only get $10,000 or $20,000, even if you have a lifetime of injuries. And so that's a completely different system that doesn't afford you the kind of protections that Michigan has demanded. And so my view is, don't throw away the good part of the system. Just make the insurance companies that are squeezing so much out of us more accountable for what they're providing.
So I know we don't have a whole lot of time to dig into this, but what would you say to people who kind of bought the choice narrative of capping their catastrophic coverage and saying, well, I don't want health coverage, I just want to drive, I want auto coverage. What would you say to that?
Well, I'll tell you that the facts don't provide people who argue that with much to go on, because if you look at the most expensive states, and I know people think Michigan is the most expensive state, but if you only look at that liability proportion, you get rid of some of the extra coverages. If you look at the most expensive state in the country, it's New Jersey, which is a PIP choice state. If you look at the next, it's Florida.
What is PIP for the viewers?
Right, so PIP is the no-fault coverage. So the Florida, New Jersey, New York, all have more expensive auto insurance than Michigan, and they all have a no-fault choice where you can cap how much no-fault you get, and yet it's more expensive. The point is that when you do that, you're not making the insurance companies accountable, you're just making it easier for them to charge you more and give you less. Yeah. That's the problem. The problem is every time you offer a system that all it does is cap what consumers can get and not hold insurance companies accountable, you're left paying the same amount and getting less. Why not get the same amount and pay less?
So I've had the same insurance agent for over 20 years because I'm just loyal like that to people who are great supporters and been good to my family, and so I want to see the business stay in Detroit. But what would you say about ways to truly get affordable rates? What should we do?
Well, short of solving the bigger problems that we've been talking about for the last few minutes, one thing that everybody can do and should do is shop their policy around.
How do you do that?
The fact is, you can go online right now, or you can make a couple of phone calls. I have found that anybody who spends the hour it takes to get 3 other quotes on insurance can save significant amount of money, hundreds of dollars sometimes a year. The fact is, even though we know auto insurance is expensive, there are a lot of companies in this marketplace. You're not going to get the rates that you truly deserve until we have full oversight of these companies. But you sure can save a couple $100s by just shopping around. And it's really worth it, because you're going to get basically the same product at a lower price, and it's worth taking that hour. It's like making $100 or $200 an hour.
We tried to pack a lot in this segment. Where can people find your reports? You've done a lot of extensive research, over 20 years of work. Where can people find your research?
Well, most of the reports that I write end up with the Consumer Federation of America's website, consumerfed.org, so that's a place that you'll find it. And I'm also happy to share my reports with you, and we can put them on your website.
And you just recently did an op-ed with the Free Press.
That's right, yeah, talking about these issues of how much more people pay based on personal characteristics that don't have anything to do with how they drive.
All right, that's about all the time we have for today. I'd like to once again thank my guest, Doug Heller, for joining us today.
My pleasure.
And to thank all of you for watching. I hope this was entertaining and informative for everyone. If you ever need any help regarding state government, please contact my office at 517-373-3815. Again, 517-373-3815. That's it from Lansing. See you next time on Urban Issues with State Representative Sherry Gay-Dagnogo.